All right, everybody, welcome back to another episode of the Crypto 101 podcast. I'm your host, Bryce Paul, as always, joined by my good man, my good partner, Mr. Brendan Veeman. How are you doing today, sir? Trading these crazy markets.
Yeah, man, trading these crazy markets, crypto's doing great, traditionals are doing great. And so, what better thing to talk about than the working behind the scenes? And that's exactly what we're going to get to do today.
Yeah, man, this is going to be just one of those episodes I've been waiting. I've seen it on my calendar for like a month, and I'm like, I can't wait for this one. Wintermute, ladies and gentlemen. Everybody knows Wintermute. If you're a serious trader, investor in the space, one of the largest, if not maybe the largest OTC desk market making firm in crypto. These are some of the best and brightest, and we are graced by the presence of Katryna Hanush, who's the Director of Business Development and Partnerships at Wintermute. So Katryna, thank you for taking your time to speak with us today.
Of course. Thanks so much for having me. Pleasure to be here.
And then did I get that right, that Wintermute is, are you guys the largest market making firm, and how would you kind of measure that?
That's a good question. Usually, actually our number one goal, and that's actually what keeps us, our tracking consistently our performance is our market share. So we obviously can see our market share across all of the largest venues. We see what the exact, split percentages is. And we can see that on a lot of the US venues, we do double digit percentages, 20, 30, 40%. And we know we're the largest market makers. On a few others, it's still single digits, but probably, sometimes there's questions asked whether all of their reported volumes are genuine volumes. But yeah, that's the fun and games in crypto. So yeah, for us, we know we're one of the largest, that's for sure. And in terms of the market share, we consistently tracking, and we also have KPIs internally to hit specific number as to global spot volume. That would be the specific metrics for our trading team here to make sure that we're consistently performing at the levels expected.
Incredible. And before we dive into your background, which is really exciting, I think a lot of people who watch the show, they've heard the term market maker, and it's always kind of like those guys, oh, the market maker's suppressing the price, or oh my gosh, there's a big bid from the market maker. Tell us what a market maker is. What's the function of it, and kind of what's the business model?
Yes, very good. The market maker is essentially a trading strategy, right? We trade as a delta neutral strategy, meaning we don't take directional risk or exposure. Essentially, we are providing a two-way quote, bids and asks on any venue, including, very, very competitive top of the book, as well as the depths of the liquidity. So market making is essentially providing, or even in regulated markets, is providing a two-way quote where you're a buyer to every seller and a seller to every buyer. That's the summary of it. And I guess from our perspective, the main things that we want and that we are building is to make markets transparent, efficient, and liquid. So liquidity is a metric you can look at as a measure how easily you can exit or enter a position in the market without slippage, without necessarily having any market impact or sending a market signal externally to other participants.
And when you think about Wintermute as like this trading strategy, I think a lot of people are familiar with hedge funds, where a hedge fund raises a bunch of money, they go and they trade. Sometimes they do, like you said, delta neutral. Sometimes they take long positions, short positions. Sometimes they're long only. But does Wintermute have outside capital that they raise from investors, or is this just like a bunch of guys and gals who pooled together their money that all work together and are trading their own money? How does that work?
Yeah, that's essentially the firm was founded in 2017, and at the time it was actually proprietary capital of our founders, where I think our founder and CEO Evgeny, I think he was saying it very openly. He was just bored of the TradFi markets, and he wanted to test the markets or test the same high frequency market making strategies in our in crypto, just because there was more volatility, more opportunity, more interesting things to do. And I think initially initially the setup was literally, a kitchen table with a few quants and developers working on our, setting it up. And of course, with some time, again, crypto being very inefficient, where, as you know, if you want to trade anything on an exchange, you obviously have to pre-fund, you have to move inventory. We had to raise some funds for some of the very, very large VCs who supported us with a raise a few years later, 2019, which was very, very tough. And ever since, I think there was an article in Forbes actually covering a very successful 2021 bull run where,
I remember that.
our yes, where we were very successful and we have made, our own capital. So right now we're a 1 billion balance sheet. Half of that is net equity. The rest is our trading capital that we utilize on a daily basis. And we essentially churn it over multiple times per day. So, we trade 5 to 10 billion on a daily basis. So again,
Wow.
going back to the market share, yes, if the spot volume is around 40, 50 billion per day, we're a significant proportion of that.
Wow. And I mean, you worked in finance for a long time before this, too, before you were even at Wintermute. So I'm kind of curious, like, what put crypto on your radar and piqued your interest in the first place?
I was there at the time, 2021. Actually, Wintermute reached out to me, and there was quite a lot of other, crypto firms who were reaching out via LinkedIn and asking if I would be interested to join. I will be completely honest, I'm not an OG. Embarrassingly, I was very late to the party, and I felt like if I don't make the move, I'll be a complete dinosaur. So for me, it was a way, a learning opportunity, definitely a very steep learning curve. I've spent 15 years in traditional finance on sales and trading, and I guess my personality gets very quickly bored if I do the same thing. So I tended to change my career path every 2, 3 years. I started in the structured product, then I moved into private banking, then I came back in the sales and trading on the precious metals. I was a precious lady, the only lady on the floor. Then I
The
moved
precious lady.
yeah, and then I moved into FX and and stayed in FX, and I worked for a high frequency trading firm, and then I worked for a venue. So I kind of had experience of buy side, sell side, and the venue, which is really great, and it gives you a very good understanding of the market structure. But essentially, at some point, I realized it's as simple as, well, you want to trade FX? Do you want my API or do you want my platform, right? Single dealer platform or multiple dealer platform. It's a very vanilla commoditized product. So for me, crypto seemed like just this new exciting role where, well, it's either I go and do PhD or write a book, or I go and learn a completely new industry. That was my thinking at the time, and I'm really glad I did. It's just such a versatile industry that I never get bored. I've been doing it for now 2+ years, and I think I can imagine doing it for another 10 years because every day is sort of different.
You haven't lost interest yet.
No, absolutely not.
I mean, working in the space for 15 years, you have to make a lot of connections doing that. So do you ever call some of your former connections or coworkers or partners up and just get their thoughts on the crypto market now? Because it's a completely different space. I mean, we're talking when crypto and Bitcoin was just a thought when you were beginning, and I'm sure that their opinions and their thoughts on the whole industry has waxed and waned a lot over the years. So like, do you ever call them back up and kind of found anything like significant or interesting along those lines?
Yeah, I guess it may be the other way around. They're calling me.
They're coming to you. That's even
Yeah,
better.
yeah. Yeah, I mean, I kind of feel, again, I have a lot of, friends who work in banks. And actually, my husband was working in a bank and he made a move into crypto, 9 months after I joined. He probably was feeling that I'm having too much fun and I'm just doing a lot of work just for, because I'm interested. Doing the moon hours, I think. So, yeah, usually it kind of seems like, many are interested and they kind of feel like they understand, but to me it feels like sometimes they just scratch the surface, right? They maybe get access to some very good kind of bank reports which they provide proper research and analytics, or they may be reading Bloomberg or kind of your conventional kind of TradFi sources, which I think give you as kind of a sense of what crypto does, but doesn't necessarily dig very, very deep. So quite often when I speak to them, it feels like, okay, it's like two parallel worlds, right? I think they're interested in the blockchain as a technology, and kind of I don't think I see banks in general, for instance, or tier one financial institutions necessarily want to be the users of the technology. They want to be owners, right? So I think a lot of that of the process on their side is kind of testing the waters, seeing how they can, make their processor more efficient, how they can streamline their, product offering. It's literally kind of almost like this exclusive club where they're trying to build something to be competitive for their own clients. They're not necessarily there to innovate. They just want to make sure that it's compliant, is, approved from a regulatory perspective.
Mhm.
And then you also have, I guess, more for, open-minded financial institutions who come to us almost for guidelines as to, okay, we want to offer it, how do we do it, how do we go about it? And quite often for them the question is, again, how do they get compliance approval, right? How do they allow some, from an operational perspective, someone to be able to, eliminate any human errors which are, can happen. And in TradFi, you have recourse against that. Whilst, in crypto, if someone is sending Ethereum into thin air, it literally disappears, right? The fat finger mistake is not possible to fix. So for many of them, it's kind of, okay, how can we find qualified custodian? How can we, streamline the operations? How we can get a compliance approval? How we can get, regulatory clarity? So I would say this is kind of like the middle or, the medium niche. And then you also have very, very opportunistic. You have, family offices, maybe hedge fund, who are already very actively trading and almost in a sense might be competing with us. And we welcome that. We want the markets to be, efficient, liquid. We want them to participate so we can hedge against them, right? So I would say those are like three different buckets are of, very, very different type of counterparties that we face. Some of them are kind of asking more for advice and guidance, while others are already actively participating or building and being active both in CFI and DeFi. So that's quite exciting to see. Yeah.
And if I'm not mistaken, Wintermute in some capacity works with different projects, right? With DAO treasuries that need to kind of manage risk. Could you talk about that process? Maybe, does when a kind of project comes up to you guys, what does that deal look like? What are the objectives there?
Um, Usually, yeah, we would be speaking to different projects here, right? From very, very early on. Quite often, so we have three business lines, right? We're just again a pure proprietary trading firm. We don't have a custody. We're not a broker. We're not a venue. We only compete in a single lane provision, which is liquidity provisioning. It's pricing. We want to be competitive on price. So when we speak to projects, quite often the first introduction actually might happen through our VC arm. So we have a small VC arm that's all corporate capital. We don't have external LPs, and they might express a long-term view. That's the only kind of team within Wintermute that has a long-term view. Everything else is delta neutral. Whatever we're buyer to every seller to every buyer. So quite often our conversation starts there, and then when there's a discussion about either we might become strategic investor, and then we want to support that project possibly with liquidity. For them it could be active LPing, passive LPing, liquidity provisioning, passive liquidity provisioning. It can be integration into the DEX. We're actually quite bullish on the RFQ order books, on central limit order books, on kind of hybrid CFI DeFi type of products, because for us it's quite easy. We can just, not easy, but we can provide liquidity from our pricing engine, do the integration either with the ecosystem or with the chain or with the actual protocol. So once we have that strategic partnership, it's only natural that when possibly the token is being launched, they ask, hey guys, could you also support us on the liquidity provisioning on for the token itself? So in terms of deals, I would say it's a very strategic approach. For us, it's an opportunity cost, right? And resources are always tight, as well as the capital, because we allocate our own capital and we look at long-term incentives being aligned with those projects. So we are not necessarily trying to compete to win every single deal. We want to work with the biggest and best in our view projects that are building something that has product market fit generally for the crypto markets.
Yeah, wonderful. And I know that there is recent expansions, Wintermute expanding into the venture capital world. Are there any exciting projects, or even like you said, coming in as strategic partners that you could talk about, and a little bit of insight onto your VC arm?
Yes, in terms of our VC arm, I mean, we're very segregated in that sense, which I believe is a good thing. Again, coming from my TradFi background, you would have to bring someone, over the Chinese wall between, the investment banking arm. I use the advisory on ECM, DCM, M&A versus kind of the sales and trading arm. I would say it's kind of similar approach here, as well. We don't necessarily, bring someone on the Chinese wall, but the discussions and the DD process, due diligence process on the project is quite different. I would say that quite often it's actually their DeFi partnership is what also possibly quite often can pique our VC arm's interest. So longer term investment could be, for instance, they've been doing investment in, say, Cosmos ecosystem because we haven't been integrated yet, but longer term we believe that's where there's going to be a lot of growth. So now we're actually looking at the Cosmos ecosystem from DeFi integration perspective, because there's a lot of very exciting projects and products that are building there. So I would say that's the overlap. Otherwise, in terms of exciting new announcement, obviously I wouldn't be able to disclose, but usually it would be two ways we look at the opportunities. One is there already an existing project that has significant amount of volume, so we would talk about hundreds of millions per day. For us, it's worthwhile our time and effort, because if you remember, the way we make money is just tiny little bips integrated into the spread, right? So for us, being there and winning significant market share means that we can, in a delta neutral capacity, hopefully see some P&L opportunity. And the second part could be the early incentives being offered, and some of them are very transparent. So for instance, we were very early adopters of DYDX as an example, recently of Vertex, where those projects look at their liquidity providers as, they want them to be on the cap table. They want them to be at the tables. They want them to have provide feedback, provide strategic development ideas, and help them to shape that product. Because again, you can choose how to build your product from two different perspectives, right? You can decide, okay, I can build something amazing. It's going to be amazing front end UI, and there's going to be so many users, and there's going to be so much demand. The supply will follow, right? Whilst others would think, well, I kind of want it to be more as a traditional exchange, where you would have dedicated market makers or LPs who are submitting and providing very tight quotes. It's a great trading experience. It's very, very liquid markets. And then because the supply is so good, the demand will come, right? Because, the spreads are comparable to, say, central limit to C5 venues. So for us, it could be either, yes, those transparent early incentives programs, or, they could be, different stages where if you integrate very early on, you can earn significant amounts of, native tokens. Or else they could be, possibly some bespoke deals which can be arranged where we have to adhere to specific KPIs, for a longer period. Again, either KPIs could be either uptime, i.e., what would be the percentage of, us consistently providing specific spreads, specific depths over a period of time. So we would have to adhere to them to be able to see those incentives materializing. Hope it makes sense.
No, it's fascinating. And I think everybody, I know I definitely appreciate kind of just the purview here and kind of the insight into how, market making firms work. So really appreciate that. But what were you going to say, Brennan?
Yeah, no, I was going to say it's super interesting to get the perspective of a market maker and what they're looking at, because I'm sure that there's a lot of retail traders out there going, hey, like, I don't pay attention to that, and I probably should now. And so I know that's probably going through a lot of people's heads. But I wanted to transition us to like what's currently happening in the markets and kind of like push the question against you of, are you seeing any kind of increase in like liquidity or interest? Because Wintermute has their hands in like spot trading, OTC, CME futures. And my initial thought here was like the ETFs had to have affected this. And my thought here is it has to have affected it in a positive light. But is that what you're seeing? Like, are you seeing this increase in liquidity and interest on all these different fronts?
Yes, I would say that definitely has been the trend we've been seeing, especially in January with the launch of their ETF. Some days we have done hundreds of millions of BTC volume as a result, so that was definitely very positive for us.
Wow.
But again, if you think about it, kind of we call them BTC, and these are majors, right? And then you have the alts. Actually, we are specializing not just in your top 10, top 20. We're actually very proud we can support top 200, top 300 most liquid tokens. So for us, that's where our interest lies. So overall, I would say the trend is that it's not just BTC. BTC just kind of a little bit of ahead and kind of, you can see some tailwinds, but we are seeing a lot more interest overall within their kind of, crypto ecosystem overall. So for us, definitely, the regulatory approval is what gives it a little bit of, that impetus overall. So, a lot of my discussions, even 2 years ago, when I would be speaking, again, to my friends from banks, would have been very high level, sort of more of a brain dump. They ask you a lot of questions over 2 hours and nothing happens, right? There's no real commercial opportunity. Whilst now the discussions I'm having are more kind of, well, guys, can we trade bilateral options with you? Or maybe we are not yet ready to do the custody and, build the whole infrastructure, but could we possibly, trade with you cash settled products like, for instance, CFDs, which is more of a retail broker offering, versus NDFs, which is more of an institutional type of kind of hedging solution for corporates or, again, for financial institutions. So there's definitely a trend where I think by regulatory clarity, or at least regulatory approval for BTC ETF or BTC spot ETF, I think is kind of opens up the doors for those conversations being a little bit more tangible.
Yeah, and I think the best like signal of that is something that you said earlier of you're not going to them. Like all these institutional players, they're the ones coming to you now. So if that's not a good sign that this is happening and that it's having a positive effect, I'm not sure what will be, right?
Yeah,
Yeah.
absolutely. I mean, definitely on our side again, we have 3 business lines, so it's really curious to see how we have CFI trading, DeFi trading, and the OTC. So and actually that's what makes the role very very exciting and diverse. That any day you could be speaking to a very large tier 1 bank. We're actually working on a couple of announcements, or a large regulated even listed company, who are finally realize it's a good old TradFi principle. You need liquidity, right, for any product to be successful. You can't just create sort of this opaque type of product that's only available OTC. You need to have markets, and because there are no the market infrastructure is still very very fragmented, you need to rely on big large liquidity providers like ourselves that are registered by the largest regulator, FCA in the UK, have the capitalization, and most importantly have experience, and infrastructure and automation to deliver on the liquidity. So yeah, it's quite exciting to see that happening in parallel to having also DeFi conversations, right, where there's a lot of
Yeah.
innovation happening and a lot of very very cool, interesting ideas being discussed on a daily basis, where most of my calls I'm like, can you tell me again, so how does it work? Can you how exactly is it going to be implemented? Like a lot of it is very very technical, as opposed to plain sort of okay, let's sign a lease, then start trading bilateral derivatives, which is also interesting enough, but sort of that's where I think the extra learning for me is what makes it more exciting.
Yeah, no, it's incredible. And with these ETFs that launched recently, we see a lot of Bitcoin kind of being hoovered up by these ETFs. I mean, like I think net $500 million a day, roughly. That's kind of being hoovered up. And I ask myself, where are they getting all this Bitcoin? Who's selling here and all this kind of stuff. And I saw an interesting chart, and I kind of just wanted to share it with you just to get your thoughts. It was from a company called Glassnode. So this is not our data, but we're sharing. Somebody tweeted this out, and this is the Bitcoin. The orange line is how many Bitcoin that these OTC desks like Wintermute, how much Bitcoin they own, and you can see that this balance has just been falling and falling and falling, and so as the price continues to go up, and so there's this kind of meme in crypto, like it's a supply side crisis, Bitcoin's fixed asset, and all this kind of stuff. But then you look at that and you think, well, man, OTC desks are running out of Bitcoin. There's so much buying. Do you have any thoughts or takeaways on that? Is it maybe just it's bad data and they're mismarking wallets, or is there genuinely just so much demand and prices will have to go higher because the higher prices will incentivize more supply for these ETFs to be able to hoover up?
Yes, I mean, I've seen another chart. I don't know if you guys seen it. Kind of the ETF aggregated flows since the
Yeah.
Bitcoin spot ETFs versus the gold, right, and kind of the reverse correlation, which was another very interesting thing to see. So maybe surprise, we actually don't mind what the price action is because we don't hold our BTC as our own inventory. We have a trading inventory. So actually, half, all of our net equity is held in dollars and dollars equivalent. So, everything else we borrow. So for us, the actually underlying price is not as relevant as actually is the action, i.e., what is the price action, whether someone is selling or buying. For us, it doesn't affect us. But I think what we have seen as the trends are definitely is that there's a lot of, possibly BTC miners who are looking to sell through the OTC desk, or we're, for instance, seeing a lot of their people who may have been smart enough, on the back of their, kind of negative price actions. They had a lot of dry powder. They entered some of the BTC trade, and they were waiting for this kind of 45 to 50k levels to possibly sell. So I think kind of that chart is not necessarily representing the picture, because there were a lot of supply. What is interesting, and I agree with you, obviously with daily net inflows, I think around, as you said, 500 million or just under it. You probably, what we will see, is the daily supply is around what kind of like 900 BTC, right? So like roughly 45 million per day. So, the net ETF demand is like more than 10 times the daily supply. So that will be an interesting, it will be interesting to see, especially after the, Bitcoin halving, how it will impact the price longer term. Because again, the daily supply will be cut from like 900 BTC to 450 BTC. So, if the ETF inflows are sustained, then the daily demand will become 20 times, right? If we do the simple math. But again, for us, we are not holding, we're not producing, we're not, having exposure to BTC in terms of maybe individually some of us do or not, or may or may not. But as a company, we don't necessarily have any view. And actually, BTC and ETH have always been pretty liquid compared to the also in terms of doing large size trades. Even when people ask how much can you do, we're like, yeah, easily we can do 100, 150, 200 million on chain. The issue we have is that our banks may only allow us to do 15 million fiat transfer right on the back of that transaction. So it's actually the TradFi system that has limits as opposed to anything we can do on chain.
That's wild. Most people, when they think of growth, they're saying, oh, we're limited on all these other places. And the last place that they expect to need to look towards is TradFi and say that is the limitations here. But I guess that's why a lot of people are in crypto in the first place.
Yeah, of course TradFi is going to, need permission. That's the whole idea of being a permissionless sort of world, right? I mean, it's our money or our clients' money. We could do with it as we please. Whereas in the traditional markets, everybody's want to put red tape everywhere, and it's crazy.
And that's why we're here, right?
That's why we're here.
We're here to change that and to get that information out there. But something cool that I saw was published not too long ago was the Wintermute 2023 year in review for the OTC markets.
Mm-hmm.
And that is one of my favorite things to read. Now, I'm a little bit biased, right? I'm an analyst. I love looking at different kinds of analytics. I just get the bug for it. And so I was reading through this. I just want to kind of go through a couple of the stats that stood out to me and then open the floor up to you. But I mean, man, you all saw weekly OTC trading volume, which stands for over the counter. Trade volume hit an all-time high of over $2 billion. You also saw an increase in the number of counterparties by 98% year over year. You saw a 4x increase in the total over-the-counter trading volume from the first half of 2023 to the second half of 2023. You saw 206 unique assets and 495 pairs traded in the second half of 2023. And then there's just all this other stuff. I mean, you saw growing of share volume from altcoins, and the list goes on. And so I kind of just want to open the floor up to you to kind of talk about like what this is and any other things that stood out to you. The main point that I wanted to make by the metrics that I just saw is that things are looking great. And the crypto market and the blockchain industry is growing on so many different fronts. And, these kind of insights are just proof of that.
Mm-hmm, mm-hmm. Yes, very true. We have been working with our product team on how do we put this data together and share it and sort of in there, without disclosing too much data, but sort of so that it's meaningful enough and, worthwhile for people to look at. I think the trend is quite interesting because what you will see also is that actually their, centralized exchanges volumes have been dropping. So whilst ours was growing, you're right, it was like 400% increase in the second half. The centralized exchange spot volume has not been sustained. It's kind of was quite going lower. So for us, it's just reflecting the trends that are more of their remember the institutions are coming. I think it was the 2022, and now they're finally here. And guess what, they still have the same sort of good old TradFi approach in terms of risk assessment. They would rather face an FCA registered, well capitalized legal entities that they can deal with on a direct basis, and say, for instance, maybe an exchange with very opaque financials and KYC processes, right? So I think it's just reflecting the trend of larger, bigger retail institutional brokers, financial institutions that are now live with us, have done the integration. Because again, that takes a lot of time and a lot of man hours, right, to do the legal, the papering, but also to do the integration to meet the requirements. So we're definitely seeing not just the trend, but now it's kind of all that work is coming to fruition, where we win significant market share with them, as I mentioned, close to a half sometimes. So I think those volumes are reflecting the work that we have done, as well as the trust that those large institutions are putting into Wintermute, generally as a brand and as a reputable name, as well as just generally our offering, our is able to add value, i.e., even if we did all of the work and we were not able to compete on prices, no one would trade on those prices, right? So again, going back to the fact that we have to be consistently competitive, we have to consistently track to make sure that we're consistently winning the market share and sustaining it, and are able to add value. Otherwise, yeah, no one would trade.
Yeah. And I mean, it has to be good for both internal and external purposes. Because, like I said, I'm sure you all are using those metrics to help make all sorts of determining decisions. And people like me get to look at those reports and come to our own conclusions as well. And so I want to look towards your background here, because you worked in the Forex space. And I'm curious if you ever draw any parallels between the current development of the crypto markets and maybe previous trends that you've seen over in the Forex markets.
Yes, I mean, I come with my FX hat on, or sometimes, maybe to the annoyance of my colleagues, where I try to sort of, keep quiet. But I sometimes express views. To me, it seems like the market structures, looks and feels very much similar to FX. So again, in FX, the way it's 7.5 trillion daily turnover, right? It's huge. One third of it is derivatives, mainly forward and swaps. One third is options. So 2/3 of it is derivatives, the rest is spot. And I think it was a BIS survey I think last year. So again, looking at that massive market, I think there's still a lot more we can do in crypto. Again, we haven't even scratched the surface. But in order to do that, what you require is capital. You require capital efficient markets with credit intermediaries, with repo markets, are proper KYC processes. And this is something that maybe crypto is still not quite there. And again, maybe going to going back to the parallels, are typically in effects everything is traded by a prime broker. So you would have large banks with a huge balance sheet, able to allocate capital in order to provide credit lines across different venues. And we are now seeing that. We're seeing more prime brokers. Some of them, for instance, are very reputable ones we invested in. Again, in effects, a lot of the volume is traded OTC. Again, we're seeing this trend with Wintermute, even, our last year, 2023 reporting, a lot of it is done OTC. A lot of the trading is also in hedging, and especially, exhaust pipes are of their hedge flow is happening on the ECN. ECN is electronic communication network, where you just do the execution and you match, possibly, or via a matching engine. Again, we're seeing a lot more ECNs coming up, and a lot more activity happening there, kind of starting with a single $1 million, now kind of more of 100 millions. So I think it will definitely be a trend where we will continue seeing ECNs. We will continue seeing big prime brokers, maybe with additional injection of risk capital, as well as kind of more of a low latency infrastructure. So again, in effects, low latency is a given, right? People are competing. Low latency is not an advantage anymore. You have to have a low latency infrastructure to compete. That's why, there are microwave towers, right? And sort of,
Yeah.
even different cool ways to try and, truncate some of the market data. So again, we, for instance, work with Fix 4.4. This is a standard protocol that is, widely used in FX and other markets. But, again, in FX, you would see each and ouch as a protocol being used just to shave off 20% of their, data truncation to be that extra 20% faster, which is interesting. So I think the market will definitely move away from kind of, cloud-based or cloud-based trading to sort of, having cross connect and trying to shave off not just, seconds or microseconds, but milliseconds, right? That's a game is, race to zero. So there's a lot more to do to make the market kind of more institutionalized and sort of more efficient and liquid and kind of transparent. Because again, when you look at the venues, when I've joined, and I was with people we call them crypto exchanges, to me they just look like vertically integrated brokerages, right? You have the custody, the execution, the OTC desk, as well as their kind of possibly even borrowing lending book, all under the same umbrella. Massive conflict of interest. It just would never happen, on a traditional exchange. You have to have segregation of duties. So to me, it seems like that's where the market will move if we really want it to be institutional market.
Yeah, it's crazy how much trading has changed over the years. Like even just over the last like decade or 2 decades, trading is it's a different game now, and we have access to all these new technologies which are always supposed to just continually upgrade the space. And one of the questions that I get asked is from my buddies that are in the other sectors. Maybe they're Forex traders, maybe they're stocks traders, maybe they mess in the CME futures market, maybe they do options. The list goes on. They come over to crypto and they're always asking like, hey, how is this different? Do you have any kind of advice for me? And so I'm curious from like your perspective, do you have any advice for these traders who are coming into the crypto markets? Because as it gets bigger and as it gets more well known, as it gets more liquid, it will attract more traders. So like what kind of advice do you have for them as they're entering into the space maybe for the first time?
My advice is to wear a seatbelt.
There's built-in leverage.
Yeah, I'm glad they're coming to you, right? Because I think there's actually a lot of noise and a lot of froth out there, in terms of, there are obviously some very, very good, sources of information, but you have to really filter. So in terms of I think sometimes I wonder, if crypto just generally attracts very specific type of personality, someone who is kind of hungry for knowledge and wants a challenge, and they kind of want, the place where they constantly, there's innovation happening, they have mental stimulation, there's, solution-driven approach, strategic thinking, put it all together, and then, as you said, with a little bit of, Wild West, it makes it very entertaining mix. But I think in terms of, if they're looking for a career switch, I would say that are, we're seeing actually a lot of big inflow of, CVs. We're hiring actually right now. And quite often, I was lucky. I didn't have any crypto experience. And, I'm still learning on a daily basis. And I don't think you can ever stop in crypto. But if someone is looking to do a career switch, we are now only taking someone with, relevant experience, or already kind of you have to really prove that you have that experience. And sometimes maybe just, jump the ship and go. You only learn by doing. That's my personal experience, is that just reading about it doesn't really give you a sense of what it is really about. I mean, I think the beauty of the DeFi is that you can actually interact in DeFi in a personal capacity, right? You don't necessarily have to be an advanced high frequency trader, or like maybe on a traditional market. In the DeFi you can learn about many different pools, and many different have interactions in a private capacity. So I think that's a good thing about crypto. The downside of that there's also a lot of their acronyms, or a lot of inappropriation of the words being used. So for instance, when I joined, I couldn't believe some of the words that are being used in crypto. It almost feels like reinventing the wheel, because I'm like, there's a good term for this, like a basis trade, and people or a carry trade, and people trying to explain it in a different way because they've never done it. So I think sometimes you kind of have to try to see or read in between the lines what is actually kind of people try to build or try to innovate, and sometimes it's innovation for the sake of innovation as opposed to finding the market product fit. So I would say yes, if it's the right personality and they have or can gain some personal experience in a personal capacity, sort of trading, learning, staking, providing liquidity, I think it's a good first step. But also, they need to have, as you say, maybe take off their rose tinted glasses and actually get to see that not everything what it seems to be. It's a little bit like Alice in Wonderland, right?
Yeah.
Sometimes
No,
it
it's
feels like a different different market altogether.
that was like, yeah, an incredible answer. And I think that us crypto traders, we're mostly, young, whatever, under 35 or whatever. And I think we need to become better students of history. Because if we don't study history, then we're doomed to repeat some of the same accidents and stuff. And we saw that in 2022. It's like recursive lending and like extreme leverage and, borrowing against, endogenous collateral, like with the Luna thing, and just it was crazy. And it was like, well, if we could have just, if one person read a book about 2007, 2008, like maybe that wouldn't have happened. Or the long-term capital management thing in like 1999. But we people are hard-headed, and everybody's got to learn by doing, right? And that means doing good and also doing really bad. But I also want to move to the CME. While we still have you, I know you guys are now trading options on the CME. This is super important. You guys also launched some CFDs, or contracts for difference. You're trading those. Tell us about this suite of derivative products that you guys are now offering and trading.
Yeah. So the products that we're offering are, as I mentioned, are very much well suited for institutional participants. The CME was a long project on our side because, first of all, you obviously need to find a clearer, and for us it was very important to get a tier one clearer like ABN AMRO bank to support our activity there. And right now we're still in the process of facing or adding more and more counterparties that we can cross block trades with. I think that will continue. Again, the reason it's easier to do via CME, you don't need to have bilateral ISDAs in place. You don't need to go through many onboarding chains. You can just be set up and start facing counterparties through a regulated venue, and that's kind of was the first step. And then the second and the third step, we've always done options, but we've always done it on a fully collateralized basis, which is obviously not very capital efficient for someone who wants to have the exposure but may not necessarily want to post 100% of the collateral. So over all last year, we have developed a dynamic margin methodology, which allows to be more capital efficient, more flexible, where we can take any collateral, essentially not just fiat stables, but also any of their tokens. So that product is more for bespoke, kind of bespoke type of offering. I would say CFDs, in a sense, are quite similar to perps. It's an open-ended contract, right, where you might not necessarily want to fix a specific tenor or term in the future. You just want to have exposure whilst it suits you based on your risk profile, as well as possibly internal models. Some people are very, very advanced. They might be running their own internal or directional strategies. And then the NDFs that we are offered, and the options just allow you to have a little bit more flexibility on the duration, notional, underlying, collateral. So again, it's a bilateral type of product, OTC type of product, as opposed to just listed derivatives that would be linked to the offering and product offering on the CME. For us, we see it as a big opportunity and definitely growing space. Again, looking at the FX market and traditional markets, usually the derivatives is a much bigger proportion of the overall market structure. In spot, in crypto, it hasn't happened yet. So we think that's where the growth will be longer term.
Incredible. Yeah, I think that most people I should say most people outside of the United States really should be like trading these options and derivatives products. Do you see any road for normal, sort of, call it just people, not like institutions or whatever, but like unaccredited investors, retail, trading options and derivatives on crypto in the States? And I know you guys are based internationally. I don't know if you guys operate in the States, but things have we felt like, we've been, hogtied or whatever. Like nobody could trade these things, and everybody wants to. So what's the deal, and is there a path forward, do you think?
Yes. We do ask our partners the same question.
Everybody
The
wants to
way,
know.
yes, like, well, if you were to list, crypto options, we would definitely support. Yes, that's an ongoing conversation with a few of, very, very large platforms that we support from a liquidity standpoint. So for us, we are keen to build that out. I think it will be probably, next phase for us. It obviously would have to be, API driven, because quite often on the other side you have the demand from, from, as you say, from retail takers who want to trade maybe specific sort of format. So, or, small ticket sizes, kind of large volume. So we definitely, we consider ourselves a company of builders, right? So not even so
Mhm.
much a trading company, but a product driven company. So for us, it will be just another product we will add to our suite, if we see there is demand. Right now, almost we feel that there should be demand, and yes, we are nudging, as I said, gently some of our partners, asking them if they're seeing the demand. To me, it would be a logical next step, and I have confidence that it will come at some point
Mm.
in the next couple of months, because it's just something. I think options, from what I understand, in the US for, retail users, it's a very conventional product, so it would only make sense to offer it to the retail users as well. But again, we are, institutional only wholesale provider. As I mentioned, we would always be only facing, league counterparties that are then providing it, so it's driven by the
Right.
demand on their side. Yeah.
Right. That makes total sense. And I think that some of these, I think the registration filing is called a 19B4, and these are going to be options on the Bitcoin ETFs, which we're hoping that those get passed, and that, kind of anybody could go into their Interactive Brokers account or their E-Trade account and start trading that, which will be, again, another big rush of liquidity and excitement and volatility. And I think that's probably where you guys will make the most money, trading those big wide spreads, a lot of activity, lots of volatility. But while I still have you, I really am curious. Just we always like to get bold predictions from our guests, and we've had all sorts of people, and from developers to hedge fund managers to folks like yourself. And we always ask them, do you have any bold predictions for this year, kind of going forward the next maybe 6 to 12 months? Any one thing, maybe it's ETH flips Bitcoin, or maybe it's we trade some X billions of dollars, or what's kind of going through your mind?
Um, I'm very bad with predictions. I have to tell you, it feels like every time I join an industry, something bad happens.
Well, we'll
So I
use
have
you as
to
a
be.
counter signal then. Whatever you say, we'll just trade against it.
I think it's a good idea. Exactly. Yeah, I mean, I joined structured products desk in 2008, and then, I joined the kind of precious metals desk, which closed because of, of the Basel II requirements and the
Mm,
balance sheet intensity coming in. I joined crypto, 2021 bull run, started January 2022, and it kind of went sour. So I think
oh
you should
no.
definitely take it with a pinch of salt. I think it will definitely be a fun ride. I think what I find very, very surprising, and I'm learning to kind of overcome my bias coming from, TradFi perspective. I'm so used to, fundamental analysis and, looking at, markets infrastructure from, from a macro perspective. That's where my interest has always been. Whilst I think in crypto it's very narrative driven, which I initially found very, very surprising. But, again, as a trading firm, we will trade whatever is hot, whatever is traded. If it's a meme coin, we will trade it, right? If it's, a successful NFT project, we will trade it. If it's, DeFi 2.0, we will trade it. So for us, whatever is going to be hot and, kind of, I don't like the word hyped, but unfortunately, that's what many of the projects have to do is, 50% of the success is 50% we can contribute liquidity, but the other 50 is them communicating very effectively about it and essentially creating that hype, or, building that narrative with a go-to-market strategy. So quite often that's actually what the even exchange is looking at before launching a project, is kind of what is the community engagement like, are, how many people are posting, following, and, it's not bots, it's genuine people. So I would say I would actually now listen to narratives more actively. So, I think in terms of even kind of that flippening or sort of some trends is where you can see some changes. If in 2023 we've seen kind of the real world assets and the, and AI and gamify being kind of more, and meme coins obviously, being very, very heavily driving the narrative. I think 2024 already now we're seeing more of the, DeFi 2.0, deep in type of projects coming to space and being very successful when they launch, as well as the usual kind of metaverse and NFTs coming back as we've seen this week, right? The Bitcoin halving event, I think that will contribute a lot to changes in the market. Ethereum restaking again are a big kind of segment of crypto markets. So I think it will be more me following more of crypto narratives rather than just kind of trying to predict the future. I think the crypto is just so unpredictable. But yeah, again, kind of going back to that chart that you were sharing, and the chart I mentioned about the reverse correlation between gold and BTC. That is very, very interesting because in the previous bull cycles, I think the crypto kind of trends were not really correlated to the macro events, but now it's becoming more of the institutionalized space where actually macro narratives are affecting the crypto space, which is a good thing because probably those trends can be easily spotted and predicted in line with the overall overarching macro picture.
Incredible. Well, Katryna, this was certainly an enlightening and just really fantastic episode and interview. And we really are happy that we got to know you and got to know the inner workings of Wintermute quite a bit better. So with that, we will let you go back to trading the markets and making legendary partnerships. And we hope that you could come back on and talk about any big updates or announcements at any point in the future. The door is always open. But until then, take care. And everybody at home watching, I hope you enjoyed.
Thank you so much. Thanks so much for the episode. It was fun to speak to you.